The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome here to the Diagnostic Trading Hour here. I'm your host, Darrell Martin, and here we talk about how to maximize leverage limit risk and be one step ahead of the markets. And what we want to do is go ahead and just check out a quick market wrap, see where things are heading right now. We got the S&P is down 11 points right now, and basically it's just off its lows, and low 1400.75 for the day. We got the Russell down 7.4 points, and it is, again, also a couple points off its lows. And we got the NASDAQ down nearly 20 points, and we got the Dow down 105. We got oil down 42 cents. We got natural gas looking like it's down 0.063, and definitely had a big drop earlier today, so I hope you caught some of that out there. And looking over at gold, we got it down, or actually up. We got it up 34 points. So values are rising as people think the dollar is going to be falling, huh? And euro dollar up 50 pips. Aussie dollar actually down 45 pips. So we're going the opposite direction there. And pound dollar is actually flat on the day. So just looking across the board and just sort of seeing everything that's going on and get a good picture going on. And the next thing is we always like to let you know one of the ways we like to limit risk and maximize leverage is with Nadex. And if you don't have a Nadex account, definitely go over and check it out. You can hop right on tfnn.com. Click on the Nadex banner right there, and that'll take you right to the Nadex website. Once you go there, click Create Account, and you can create accounts, $100 deposit to get a fully funded live account with no commissions, no platform fees, no data fees. So all good stuff right there. All you got is your exchange fees. But you get paid those like trading futures anyway. But now you get to cut out the broker. You get to be direct member of the exchange. Nadex is a North American derivatives exchange in Chicago and is registered with the CFTC, the only regulated exchange where you can trade binaries in the world, and the only exchange, period, where you can trade the box spreads. They call them bull spreads. I call them box spreads because basically they're a box, and they're bullish if you buy them, they're bearish if you sell them. So maybe bull bear box spreads might be the best name there. And if you want to test drive, if you want to check it out, and you just want to demo trade and follow along, so like what we were doing yesterday. We traded the Fed funds rate, or Fed funds minutes. And so every once in a while I'm doing trades in here. If you ever want to, like I said, mirror them, and like I said, just demo it out, you can go to Want to Test Drive, click Open a Demo Account. And all you have to do is fill in a username, first name, last name, phone number, and email address. And then click Apply for Demo. Okay? And when you do that, it takes 15 seconds. Then you'll get an email right after that with a password in it. If there's an O in it, it's a 0. It's not the letter O. And then you go right up here, you click Log In, and you're able to log right into your account and get immediate access. They give you $25,000 of play funny money that you can go in there and play with. And you can see how the platform works, how the binaries work, how the spreads work. And you can, like I said, follow along with us, and you can also go in there and basically just get all the details worked out and, be rocking along. So with that taken care of, let's go ahead and check out what's been going on. And as far as the news announcements and everything else for the day, overnight China had some bad reports showing a continued slowdown there. And that's expected to be a pretty big issue, and that's been going on for quite a while. And we also had several other reports come out. And one of those, of course, being the unemployment claims number came out this morning, worse than expected. And so not really showing the positive trend there that people are wanting. And, went on to new home sales that actually did show a positive trend. So there was actually a little more new home sales than expected. Unemployment claims came in at 372,000 with an expectation at 365,000, while new home sales actually came in above. They came in at 372,000. Sort of weird there, right? And with forecast at 363. So it's odd the numbers came in like, completely the exact same number. But one's bad and one is good. And we don't got a whole lot more really going on today. So as far as the U.S. goes, but everybody's going to be hanging on, all the words that come out of pretty much every Fed, mouth. here pretty soon, just like we had the other day. And so the overnight really started off the sell-off, and it picked up with the unemployment claims, and it decided just to take off on into the evening there, and then on into the morning, and then now into the afternoon. And everything came down basically touching right near its standard, or actually we'll call it implied deviation levels. And there is definitely a difference between a standard deviation and an implied deviation. A standard deviation level is going to be looking at historical volatility, what the market has done. But it is not looking at what the market expects to happen, okay? And so where an implied deviation takes into account implied volatility, there's different ways to tie that in depending upon how you're trading it. And the way that I do, I build it for short-term trading, like 5 days, 1 day, so anywhere between 1 to 5 days. So there's different formulas. You want to make sure anytime you're using anything like that, you're making sure you're using it for the purpose it was intended for, or it accurately works on a consistent basis. And like one of the examples, like Thinkorswim has one, but the developer who made that, he actually made it not for day trading. He made it more for going in, like, let's say he was doing his iron condors. He wanted to be able to see, what do I expect the price to touch, and where do I expect the price to expire, and, looking like 1 week, 1 month, 2 month, iron condors, versus this being, the way that I like to do, the way that I wrote my formula. I use it for day trading, for intraday trading, for profit levels, and for checking out just, all the markets as far as anywhere between a 1 and 5 day, profit goal there. So, that's something you may want to be checking out as well. And we'll be posting some information up on that pretty soon, getting that up on the website. We are literally like right there, and we are reared and ready to go. I know a lot of y'all are as well. And so we can't wait to launch it out and have it full throttle and working. And what we'll be doing is going in, and I'll show you this. This is sort of a rough draft version. But what it's basically showing is these markets, and it's showing what all the deviation levels are, and it's showing how many deviation levels is up or down for the day, okay? And then right now, is it actually at one of those deviation levels? So sort of a pretty helpful thing, and looking at a lot of different markets out there. We got oil is moving quite a bit, and so we go over and we check out say oil. We can look at it and go, okay, well, what is our profit target on oil? And so on oil, we go here and we'll find the oil future contract, and we'll find that the target actually is 95.41. So that is actually the one standard deviation level. So when we're about 75%, 70% or so there, that's where we really want to start tightening stops. And so like this might be a point if you were fortunate to get in that nice oil drop right there, and it's still going. It still has another solid dollar left in it, and it is moving, just lightning fast. So just some very, cool things. Again, have that profit target. Know where you're taking your profits, or, $1 move in your favor that you give it up 5 seconds later didn't do you any good. So, but right there, you can just see, it just sold off like crazy. And so I guess they just opened up all the drilling wells, everywhere. But, yeah, so I fell down, see it's pulling back a little bit, and but just a lot of price action. And let's see here. I'm going to go in and we'll pull up one of the things that I like to do over here, and I'll pull up an active trader. It's a pretty good way to check things out. And we'll go in and pull it up right there. Let me open this up, pull it out. And we'll zoom on into the 1 minute because it's moving so fast. And so you can see right here, when we look at the price level, the price action, and I've got there to 96.01, and very close to our deviation level, where we were expecting a drop to, let's see here, oil of 95.41, so about 60 cents away from that, definitely within that 70% or more parameter. And basically what I do, 70%, we're going to be building all this in. This is just, piece by piece, we're putting each piece together to make it easy and, very applicable. So we go and go, okay, well, 97.26 minus 95.41, it's $1.85, all right? So times 0.7, it's $1.29. So now I'm going to take that number. That's about 70% of one standard deviation there. And I'm going to go, all right, so $1.29, and again we got 97.26, that's yesterday's close, by the way, minus 1.29, 95.97. And so that's really like where you want to be like, hey, if we're like right near that point, which we've got down to just about 96, I'm going to be tightening it up. So 96.07. So yeah, I'm within like 5-10 cents. And, just make sure that you're definitely, tightening those numbers up and, don't give up that profit. One of the things we always talk about, we're talking about, diagnostic trading. And yesterday we got into a bit more about diagnostic trading in detail. And I was talking about standard deviation levels. And, with diagnostic trading, you're looking at 4 different things. One of those things that you're looking at is you're looking at statistics. So, such as implied deviation numbers. And because that's where computer-generated orders are going to start kicking in, okay? And so you definitely want to be looking at that. Another thing that you're going to want to check out is the ability to go in and look at just other things like fundamentals, so like news reports that are coming out. And then you're going to go in and you're going to check out a couple other things, such as technicals. Just looking at technical analysis. Is the market saying, does it look like it's saying it's going down? And if it does, then that's a clue for you, right? So you want to put all that together with your technicals and your fundamentals and your seasonals and your statistics, and then that helps you figure out how and where other traders are placing their orders to help you not only figure out where you want to get in, where you want to get out, but a big is where you want to get out. This is I remember somebody telling me this a long time ago. He was a pit trader and mentor of mine, and he was telling me, it's easy to get in the market. Anybody can get in at any time they want to. It's harder to get out. And he compared it to a river. And he said, you can choose, like if you're diving in like I'm talking like not just a smooth river. I'm talking about like a rapid, rapids, and like in Colorado or wherever that you like to go whitewater rafting if you've ever been out there. You can choose where you get in, but you don't get to choose the exact point where you get out. I mean, once that water is moving, it's moving. And so, one, recognize the fact that you choose. You have control over one thing ultimately, and that's when you get in. That's what you have complete control over. Everything else, you have a plan, but with that, you have a choice. Okay, like you can or cannot. All the other stuff is like, well, you can want and hope that it hits or doesn't hit. Okay, but you always get to choose whether or not you get in. So once you choose where you get in, now you got to have a plan of where you're going to get out, because you got to be thinking about it in advance. If you're stuck in, you hop in and you get in those rapids, man, and they start going, and you decide, hey, I want to get out now. Well, you can't do it in the middle of like Pinball Canyon, right, where you're getting bought between all these rocks. So you got to have a plan of where you're going to get out, and because you just top out, I mean, that could be fatal, right? So let's talk about when we get back from the commercial break, sort of how to use these standard deviation levels and how to have that plan on where you get out. All right, stay right there. We'll be right back after the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back here to the Diagnostic Trading Hour. And if you have any questions, give me a call, 1-877-927-6648. Again, that's 877-927-6648. Here to take any calls or questions you got about the market in general, about diagnostic trading, deviations, Nadex, etc. So just let me know, and I'll be happy to help you. And so looking back over here and sort of just checking out how our numbers are doing, it's always good to, see how it's going there. And we got the Russell still pounding on down, 802.3. Our goal on that right now is 800.53, and we're definitely within that 70% mark already. So doing pretty well there, and meeting the expectation on the -1 deviation there. We can go on over to the Dow. It's already hit it. So, and, so we want to be mindful of that right there. And let's see, let me pull up the Dow's current quote. We got it down at 13,031. So just a few ticks under. All right, so it's stretching that standard deviation level right now. And then if we go on over and we check out gold. So gold right here, we got gold, and it is at, let's see, 1671.1. And so yeah, it's definitely moving up and up and up and away. And so let's see here, got the December contract in there. Just want to make sure it's lining up. Yeah. So it's moving up pretty fast, and it's just taking off today. So understand that the third standard deviation level, that is 99.995% of all expectation move, okay, is 1677.1. And So just be aware of that. So we are right there. And I mean, not that it can't break out, but that is the expectation of the move. And let's see here. Go in. I'm going to check something on this. It's on the gold market because that's just crazy that it's going like that. And yeah. So yeah, moving a lot, and definitely is pushing that level, and went right up to the level. Actually, let's see here. We got a move right up to 1677, like 0.5, like just ticked it and came back down. So it really has, apparently capped out on the day. We'll see how that goes. But that's a trade potential short setup right there. And if you are going to short on a rising market like that, you better be using Nadex. That's all I got to say right there. Okay? Like, use Nadex. You want to limit that risk. So, and then on silver, we got silver moving pretty good right now. And it looks like it's also up and away there. And we got natural gas. Let's see. It was down one, and it's actually made retracement on that. Big drop, not abnormal for natural gas to have big moves with big retracements. And but I'm going to go and back out, check that out. We'll look at natural gas, and yeah, I mean, it dropped all the way down to 1.2682 and 2682. So literally about halfway between here, these two deviations. And now it's pulled on back up to 1.2748. So it basically is pulled like right back up to that one standard deviation level. So, and then if we go back over, we'll look at a couple of the others that are moving like crazy. We got corn moving down there. And so now I am looking at this corn contract, 808.5. And it is past the one standard deviation. It is working on the second standard deviation. Okay? And so that would be down to 800.15. So let's say it's going to do a retracement because it basically came down. Now, it busted through the one standard deviation level, solid. All right. Well, let's say it's going to go ahead and do a retracement now from the low. Then one of the features that we're working on building in here is it actually telling you what would a retracement back up from the low right there be. Now, I am looking, by the way, at the September contract. I know the December contract is more liquid. I'm just looking at it because that's what the Nadex is following right now because it's following the front month contract with volume. And let's see, 820.44. So it'd actually be a retracement level from the low. If it went that'd be a big move back up. Wow. But we also could easily push right on back down to that next level to 799.37. So that's about 7 more points down that corn couldn't make it for the end of the day. And we'll see how it does there. And then going on over, soybeans already did its thing and retraced off of that. Again, that's the September soybeans. And then looking at pound dollar, so U.S. franc came down and already retraced back up. And we'll look at U.S. franc and then come back to pound dollar since U.S. franc already did the move. U.S. franc came on down to 95.38. So literally just, 11 ticks below the one standard deviation level, or implied deviation level, And then bouncing on back up right now. So at that level, that would have been your area using that implied deviation level. Like I said, we'll have this available on the site soon. That would have been your area where you'd be looking to fade it to buy. And if you did, be up right now. So going pretty good. We'll check out pound dollar when you come right back after this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks. Welcome back. All right, I want to check something out. We'll hop over to pound dollar in a second. But the S&P futures literally just hit their 1 standard deviation level. And so like that, just bouncing right off of it over and over and over again. And that 1 standard deviation level is basically 1399. And you can see basically 1398 and then bounced right up off of it, stopped, like just dead heat right there. And I mean, just a massive fall and then paused and went back up. So this would be a potential trading opportunity if you wanted to, let's say, fade the market. All right. And if you want to fade the market, that can be pretty dangerous, right? So, you know, sort of like trying to catch a falling knife, right? So, but we can go in with Nadex and we don't have to have that same danger. When you go in here, $85, all right, couple point stop loss, 1 contract. And, I mean, you'd have, if you're in right now, you'd have a couple point stop loss to let it, you know, at least break the low. So, definitely not a bad potential trade. And so you can hop in and do that. You can increase the amount out. So we're going to go in. We're actually going to throw in, and we're going to do 50 contracts on this trade. It's a risk of 850, and that's equal to doing 10 actual underlying market contracts. Put the trade on. We have a prop potential of 13,950. Now that would require retracement all the way up to 1430. Don't really see that one happening, but that is a potential right there on the trade. And so on that reversal there, we'll hit the place order. And as soon as I hit it, boom, I'm filled, I'm in, I got my 50 contracts, I'm long. And basically you need the market to go up a couple points, and then I will be at break even. Everything past that is profit, but I have capped off my risk very, very small. So if you'd like me to go in and sort of show you how that works again, I went in. This is a demo account, so I sort of like took the market on the demo account. Just so you know, that's not exactly how it works over on the live side. And I can show you here. I'll show you a live contract right here. We got the S&P, and there you go. See, even though the demo is not showing it, now it's back. But anyway, so I took the contracts over there. And, now, let's say you decide differently. Let's say you decide that you think the market's going down. All right? You don't really have a trade set up. You'd have to really get one with a ceiling around 1,400. And so let's see if there is one. Got 1,405. That's going to be a pretty big stop. Nope, that one's not going to work. Got 1,405 there. 1,405 there. Too high on that one. And... yep, too big. So now what do? You want to go short, but how do you do it? Okay? There are different ways to do it, but one of them is, you could be looking at, we bought, right? So if you want to go short, buy the spread, okay? Just like we just did, okay? And then sell, so buy 5 spreads on the US 500 and sell the future, okay? Now, you could sell the future, or your other possibility is you could actually go in right here and you could sell the master spread. So like right here, you would literally not have a trading opportunity if you were just doing spreads, if you wanted to go short. But since you're doing the hedge, you have an additional trading opportunity. Now you can hop in right there, and we got a floor. Look at this trade right here. We got a floor of 1,400. Okay, what that means is the spread stops losing. Basically, it can't lose any more than the maximum risk there below 1,400. Once it's capped out on its risk there, which was pretty low on the trade, basically we had a $21 risk of spread. Okay, then it's capped out. And so now what happens if we decide to go ahead and buy this spread like we had, but we decide to sell this spread? Well, this is the Nadex on Nadex hedge versus the Nadex versus the future hedge, or Nadex versus a Forex spot market hedge. Okay, so a Nadex on Nadex hedge would actually allow you to go in here, and it'd be a pretty big order, but it allow me to make money. Now, this would allow me to make money on the 1370. So now, how does that even stack up over here on a standard deviation? So that'd be past the 99.95% of all expected move deviation level. All right, and so I think we're pretty good on that one, in the sense of like not really giving up profits by it being capped too much. If it keeps going, we're still not going to be that unhappy. So we made quite a bit of money. And, just make sure, when you're looking at these trades, you are managing your risk, your size, that it, lines up with your account and your trading comfort level. But the biggest thing is that it helps you manage your risk. Okay? So by helping you manage your risk, then now you get to focus on managing your profit. And our profit, well, what would the expectation be if we were thinking the market was going to go short? Okay? Then... we'd be looking down to about 1385, probably about as far as we would expect anyway. Okay, that'd be a second standard deviation. And right now, it's really having a hard time just breaking this first standard deviation. It just keeps floating right at it at 1399 and 1399.25, 1398.75. So it's literally, see, like right there, it's alerting right there. We just hit a standard deviation level. And so we really, really definitely want to be aware of that and go, I want to see something to give me some, indication it's going to go down. If it goes back up, I'm ready. If it goes down, I do have a trading plan. And now it puts this big trading loss in here, $25,400 if I do 50 of these contracts, right? Well, is that really my risk? Okay, not with the hedge. So if I got the spread on, okay, then my hedge, all right, is actually going to help cover my risk. It'll help cover me up to 1430. Well, this goes up to 1450. Well, okay, so when we get to 1430, if the market rallies 32 points from where it is right now, get out of both sides, okay? And but it'll basically help cover the risk on this on the way up. And so how would I know what my actual risk would be on the trade? Well, your risk is going to be the difference between where you buy and where you sell. Just think about that being like your profit and loss, okay? Except for it opens up once it gets below that floor. We're already below the floor of 1,400. So if I bought one spread at 1402.1, and let's say I sold, okay, the master spread at 1398.4, 3.7 points, okay? So that's $37 risk total, all right, for one hedge. Okay, so one master versus one underlying. And then I go in, and I can actually take advantage of that by going, okay, how many? So now if I want to do 50, okay, be at $1,800 risk. So whereas if I just went long, on these right now, it'd be like, 1,000 or whatever. That's about the risk that we have right now. We can do the exact calculation. It's actually pretty simple. Just how many ticks do I have? 21. Okay, because my floor is 1,400. So 1402.1 minus 1,400 is 2.1. And every tick, 0.1, 0.2, 0.3, is worth $1. So 21 ticks, $21 times 50. So I got 1,050 risk right now on the trade. I have a very large profit potential. So my profit potential, 1430 minus where I bought, 1402.1, 27.9. Okay, so that's 279 ticks, $279 times 50. So I have about a $14,000 profit potential and a $1,000 risk, and that's on 50 Nadex spreads, which would be equal to 10 contracts. Okay, so 10 contracts. So we divide that out by 10. Talking about $100, 2-point risk, all right, and $1,000 in margin. So I mean, you'd be putting up that just to trade a couple contracts anyway. So you're looking at 800 to at least 1,000 or so, depending on who your broker is. So now we have the margin, but we don't have the floating P&L. So when you trade futures, right, what happens is you got your margin, 400, 500, 5,000, whatever it is. But you also have your floating P&L. So if you're down 500 and you put up 500, now your account has $1,000 less in it. This one, our margin and our risk are the exact equal. So there is no floating P&L in the sense of having to put up additional capital. So you never get a margin call because it's 100% collateralized, meaning $1,000 risk, you put up $1,000. And you won't lose more than that, and you don't have to worry about further drawdown in your account. So pretty cool, pretty simple strategy. And if you're wanting to go short on the market, I mean, we're at a standard deviation level. I'm not at a lot of confidence to keep going short at this point. But if you wanted to go short, then and you couldn't find a spread to do it, then the hedge strategy would actually be the ultimate solution to accomplish that, because it does give you that ability to go short and then hedge yourself off, whereas normally, that would just not be a possibility. So, go in and play with that, check it out, and, try out some different trades. But I know that's one of the things that I found frustrating before I figured this strategy out was how in the world can I place a trade? Because I don't even see a spread that I like. And then I started noticing, I was like, wow, okay, well, sometimes the best spread may actually be a hedge. And if I don't want to hedge futures versus Nadex or Forex versus Nadex, I can hedge Nadex versus Nadex. And that requires less, money in a lot of ways, margin, P&L, everything else, and it's all in the same account. So when your profits are realized, they're realized overall. Versus, let's say if I make $3,000 in the futures account, but lose, $1,000 in Nadex, well, now I got to move some money over to Nadex or back and forth. Now it depends on how big your account is. If you have, 20, 30 grand, then you can go a little while without happening. And ideally, you're making a lot of money on the directional trade and not and losing money on the hedge portion, so that way that's going in your favor. And another big point, really make sure you don't miss out on this, is whenever you're doing this trade right here, you go in, you place the trade, you want to make sure that you take advantage of the fact that the spread, like if it's maximum loss, okay? So if you have maximum loss on this spread right here, because this one made a bunch of money in the market, fell down, don't close out the open spread, okay? It's at maximum loss. There's no reason to close it. A lot of times you can't even close it. But don't close it. It could come back up. I mean, the market could easily drop down to 1390, okay? It drops down there. You close out this spread. This spread's at maximum loss, and then it could bounce back up to 1405 or something. And then all of a sudden you're actually up. You're profitable on both sides of the trade. You just picked up another $1,000 of loss put back into your account out of the, say, $5,000 you made or whatever, $2,500 you made, and depending on how big of an account size you did, and it'd be $5,000 if you had 10 contracts, or I guess 50 contracts. So it'd be $5,000 minus that, you make $4,000. So you get $1,000 back of the $5,000 you made. Plus, you can make maybe another, $500 or $1,000 by the thing going back up by expiration. So when you're doing the hedge, don't close out the hedge if it's at maximum loss. And, now you may want to close it out if it gets halfway there, or close part of it out or something like that. So you're reducing the potential maximum loss. But, just think about your profit-taking strategies, and definitely, have goals in mind. And don't get carried away with the hype. Thing starts moving, everybody hops in, and, you could be the guy that hopped in right at $13.98. Somebody sold right there, and they're really praying a lot right now, right? So they're like, man, somebody bought there, somebody sold there. So somebody's like, come on, come back down. If you just come back down, I'll get out. Come back. We've all been there, right? So don't be that guy. Hedge yourself, all right? And have a plan. Know where you want to get out of the river, all right? Ahead of time. When I get in, where would I like to get out? And why do I think that I'd like to get out at a big profit? It had nothing to do with profit. Where would I like to get out based on what? Objective things like technical analysis, standard deviations, which are not. One of the nice things about standard deviations or implied deviations, they're really not subjective. So here's the price level. The only thing that's subjective is maybe when I'm 30% away from that, I might tighten my stops. Okay, but the price level is the price level is the price level, and so it sort of takes you out of the picture on making that call on is the MACD pointing in the right direction, and all the other fun stuff that goes with all the technical analysis, all the challenges that we all face as traders. So it's a nice thing to add in that security, that additional benefit of diagnostic trading by not just relying just on technicals or just on seasonals or just on fundamentals, and really not being the person who's making their decision to get in at those points, but using those points to figure out where to get out. So where do I want to get out on the S&P 500? So let's see here. Questions we got over in the den. So by the way, if y'all have any questions too, feel free to call in. Just hop over. You can, if you ever can't find our number, tfnn.com, but you just go to 877-927-6648. And I can pull the SPY up. We'll do a little run on it right now. Let's see here. Let me grab this off. Pull right there. And enter in a all right, and run it away. Let's see here. Okay, that's where we go. And one of the questions was, can I look at the spiders on this? And the great thing is we're going to make this to where you can put in any symbol. So that's actually once we get the first, we're going to have like 3 rounds going up. But one round is going to be, we're going to have the Nadex up there. The next round is we're actually going to put up where you can put in your own symbols. So whatever you want to look at. And then we're going to tie it into our scanner. So you'll actually have the levels on there. And eventually we're actually going to tie it into where you can feed it into charts. So we're going to make it better and better and better and easier just based on, what you let us know that you need. And that's really what we're, all about, trying to figure out how to, help you be more effective in the markets. So I'm going to replace the S&P with the spiders and see what we get right here. I'll do the analysis and I'll be right back to the commercial break. I'll let you know the results.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right. Welcome back to Diagnostic Trading Hour here. Got a request to pull up the spiders, check out the implied deviation levels and how they all add up. So looking at the spiders right here, they went down to 140.44. And our standard deviation, or implied deviation, keep saying that, implied deviation level was 140.34. So, I mean, literally within like 10 cents. And basically calling a reversal at that point. So what it did, it pulled right back up, right off that implied that deviation level. So definitely, you know, hit it on the head right there. We can go in a couple other popular trades here. We'll go and check out Apple here for the day. And let's see, had a low like somewhere around 661. And let's see if it's pulling in 657. So within that 70% mark, yeah, basically is less than 30% away from the standard deviation. We're always looking for that 30% from, and definitely hit that. Before it literally turned all the way back around. So, and then it fell right back down, went back up to 669. So, and then it fell right back down. Basically closed it yesterday. It was like almost 670, and just basically bouncing between those two levels. And so you can see right here, came down, and within 70% of that deviation level, flipped back around, came back up, flipped back around. So, and then we go over, we'll check out, let's see, SCO, popular one in the Tiger's Den right now. over, man. It is just ripping it through the roof there. Let's see here. SCO. And it has a standard deviation level of 3811. And that basically puts us, again, within that 70% range. We got 3786. So only 25 cents off. So, yeah, I mean, really hit the head on that one. It obviously a big move expected, and it called it right there for you. And then going over, this is also great to use with options. So if you're not doing a straddle or anything like that. So very good to hop in there with that. And then we go over, we'll even check out the GLD. So GLD, what we got going on in GLD? Looks like one standard deviation level is 162.33. And it hit 162.45. And on that implied deviation, boom, fell right back down. So this literally, I mean, we got 12 cents. And came back off. So definitely that take profit level. Potential reversal. If you're gonna be fighting the trend though, make sure you're using some with defined risk. So that way, you don't get caught fighting the trend. But and I'm not trying to fight the trend based on technical reasons. I'm reversing the trend based on statistical reasons. That's where basically the money power should run out based on what people are saying and all of their option buying for the GLD fund, okay? They are saying that this is how far they all expect it to move, all right? And that's built into the option premiums, implied volatility, and that's why we use implied deviation, not standard deviation. And so, it really is very, very helpful. And I hope you're starting to see some potential there of what that can do to help you in your trading, and I look forward to bringing that to you. And let's do a little market wrap here before we close it out on the Diagnostic Trading Hour. And we'll go ahead and see what the market is looking like overall. We got the S&P down 12.25 points, starting to bounce up a little bit there. And we got that long trading. We'll see if that thing goes through. We got till the end of the day, 415. If it goes up a couple more points, we're break even. Everything above that is profit. So we'll see if it keeps going. And literally hit the standard deviation level within a tick and then bounced. Same thing pretty much over there on spiders. And then we got the Russell. It is up 7 points right now after coming down to its level. We got the NASDAQ down 19. We got the Dow down 119. And it's just moving and rocking. We got gold still up 32. So, and I mean, that's just, gold is just taking off like crazy. And anyways, keep your risk in check, maximize your leverage, get one step ahead of the markets, and tune in tomorrow, 12 to 1 Central, 1 to 2 Eastern Time at tfnn.com or tfnn.mobi.